Hey, what's up, blue collar business owner? Welcome back to the Blue Collar Prosperity Podcast. I'm your host, Paul Maska, where I focus on helping guide you to have a business that produces consistent, positive cash flow. In doing so, you will have clarity and confidence that your business is headed in the right direction. Today is a solo show. It is the first Monday of the month, and the first Monday of every month, I do a solo show, no interview, where I dive into some sort of financial topic that is relevant to your trades business. And what we are going to dive into today are 5 things that you need to do in order to get your business ready to sell from a financial position. Now, there are dozens and probably hundreds of things that you need to do to get your business ready to sell. I'm going to dive into 5 things that I see that need to be done most often from a financial standpoint in order to get your business ready to sell. So, as a CFO for trade businesses, my job is to make sure my clients and you, the listeners, know exactly what you need to do in order to achieve your definition of success, freedom, and wealth. And that's what we do here on the Blue Collar Prosperity Podcast is figure out what does success look like. In this case, in this episode, success looks like we want to sell our business. So now we need to know what levers do we need to pull in order to get the most return on the time, blood, sweat, tears, everything that we've put into this business for however many years you've been running your business. So I have spent the last 6+ years in the trades as a numbers nerd, and really the last 14 years as a small business owner, scaling and selling 4 different companies, most recently an electrical service company that we grew by over 500% in 3 years. So that is what we are going to dive into today. What are the 5 critical things that we need to have in place from a financial standpoint in order to have a business that is more sellable, more attractive, and can get a higher return on all the time, energy, money, blood, sweat, tears, everything we put into this business? So first thing I want to go over is just kind of give you a brief overview of when you take your business to market, what are people looking at? And they're looking at a thing called EBITDA. So EBITDA is earnings before interest, tax, depreciation, and amortization. You can also see some bit when you are looking at businesses on the market, or people might ask you what's your SDE, which is also known as seller's discretionary earnings. So that's another thing that people look at, but we're going to go off EBITDA today, which is your earnings before interest, tax, depreciation, and amortization. So depending on how big your business is, how profitable your business is, there will be a multiple assigned to your EBITDA, and that's what your business will be worth. So it could be anywhere from 1 times EBITDA to 10 times EBITDA and beyond. So that's how businesses are valued in the small business world. It's going to be a multiple of EBITDA. And depending on, like I said, all the different factors that go into it, it'll determine what people are willing to pay. So we got that out of the way. Now, what do we need to have in place in order to have a financially sound business that is attractive to buyers in order to get a great multiple of EBITDA? So the first thing we have to do is we have to have very clean financials. And I look at financials every day. I would say 95% of the businesses that I look at from a potential client doing a financial assessment, looking to acquire, their books are kind of a hot mess. And the reason for that is most business owners just don't know what they don't know. They don't know what they need to know. They don't know how to guide their bookkeeper. And most bookkeepers don't know the best way to, 1, set up a chart of accounts for a trades business. And then 2, they don't know how to handle all the transactions, especially as you scale. So what I want you guys to understand is the team that got you to point A is probably not going to be the team that got you to point B. So we need to make sure that our bookkeeper is serving us and we have really clean books. So that way, anybody that's looking to potentially acquire your company, they can look at your P&L, they can look at your balance sheet, and within a few minutes, they have a good idea of what's going on in your business. So where do most companies get stuck with this? Where do most business owners get stuck with this is when we first start our business and we're the technician and we go out on our own and say, I don't need to work for so-and-so anymore. I can do it better. I can do it cheaper. I can do things, differently. I just want to be my own boss. We get started and we start doing work and we start being a technician. Before we know it, money starts coming in. And then before we know it, we've got to get QuickBooks set up. And then we got to figure out someone to do books because we aren't bookkeepers and we don't know financials. And we got to put somebody in place. Usually that person is one of 2 things. 1, it's somebody that you hired to do a little bit of everything when you first started. They answered the phone, they did your billing, they did your scheduling, they did your books, they do a little bit of everything. They'll order things when you need to. They do a little bit of everything, but they didn't sign up to be a bookkeeper for a multi-million dollar company. However, they're still doing the books that as a multi-million dollar company, but they're doing it the way as $100,000 business. So that's usually one of the biggest mistakes I see. The second biggest mistake I see is they're using a bookkeeper that was very cheap. They might have met him at a Chamber of Commerce event or a BNI event, and they're just not experts in the trades. As you grow, you need people in your organization that are specialists and experts in their area. Most generalist bookkeepers are not experts in the trades. They don't know how to do the bookkeeping that'll serve you best. So that is the number one thing we got to have in place is clean books. And you're going to pay for it either way. A lot of people are like, I don't want to pay a bunch of money to get my books cleaned up. If you don't do it now, it's going to be even much more expensive later. So we want to get our books cleaned up, and then we want to get a reputable bookkeeper on, not necessarily on staff, but on our team. Usually it's outsourced to somebody that is doing a great job with bookkeeping. So that's number one, clean books. Number two, it has to be profitable. Your business has to be profitable in order for somebody to want to buy it. So there's lots of people, lots of business owners out there that think, well, I'm doing $4 or $5 million in revenue. I don't really care what the bottom line is. People will pay for that revenue. And unfortunately, if they do, they're going to be paying a lot less. And there's a lot of different mindset issues around this. A lot of people don't want to be profitable just because they don't want to pay taxes, or because their CPA said, hey, you're having a great year. Why don't you go spend a bunch of money so you don't have to pay taxes? Well, the issue with that is if you ever want to sell your business, nobody's going to want to buy a business that is not profitable. So we need to make sure our business is profitable. Ideally, we're at 20% net profit. So if you look at your profit and loss statement, at the bottom line where it says net income, we want that to be 20% of all the money that came into the business. So that is number two, which leads me to number three, that the less add backs as possible. We want the least amount of add backs as possible, because if we have a lot of add backs, it's going to raise red flags to potential buyers. And what do I mean by add back? So a lot of times when our business isn't profitable, we can justify it by saying, well, a lot of these expenses are personal expenses. I pay for my own health insurance. I pay for my own vehicle. I pay for my own cell phone. I rent out my home office. I do all of these things in order to not be profitable. And we start adding things back. Or we say, well, I bought all these vehicles, but I didn't really need them. I just bought them in order to not pay taxes. Well, that's not great, because once there's a few add backs, then the potential buyer really starts to question, how is this person actually operating this business? Are they operating it the way I would want to? Because most people want to buy your business. They don't want to buy a job. They want to buy a business that is a money producing machine, a profit producing machine, and it creates consistent positive cash flow. So if you're going to market and you have to do a lot of add backs, that's going to raise a lot of red flags, and that's going to bring down the multiple of your business. So let's operate our business with 100% integrity and make sure all the expenses that we're running through the business are legit business expenses. Trust me, your business will be worth so much more, and there'll be so many more people who want to buy your business if that is the case. So that is number three. Number four, what I want you to understand is that 99% of small business transactions are done through what's called an asset sale. An asset sale is when somebody buys all of the assets in your business, but none of the liabilities. So what does that mean? Say you've got a whole bunch of vehicles and the notes on all of them. So all the payment, the notes, the principal outstanding on all of your vehicles is $1 million. Well, when you sell your business in an asset sale, you have to transfer those vehicles and their title to the new owner. So what does that mean? They need to be paid off. So if they're not paid off, that's fine. However, you will then have to pay them off with the proceeds that you get from the sale of your business. A lot of people think, well, they're just going to take all that. They're going to take all the car payments. They're going to do all that. The answer to that is most likely no. They're not going to do that because they want to buy the assets and not the liabilities. So there are two ways to sell a business: an asset sale and a stock sale. A stock sale is where they would take everything, business name and everything that goes with it. Whereas an asset sale is there's a new entity. They start their own LLC, call it. Then they buy all of your assets, everything that goes into running your business. And then they create a DBA, doing business as the name of the business that you previously owned. So what we need to understand is all of our liabilities. So if you go to your balance sheet, I know this is boring financial stuff, but if you go to your balance sheet and scroll down past the assets, if you look at all of the liabilities, we want to have the least amount of liabilities as possible, or the ability, i.e. the cash in the bank, to pay those off if we really had to. So what does that mean? When you sell your business in an asset sale, you usually, in most transactions, you get to keep all the cash in the bank, unless any of it is what's considered unearned revenue. Say you have some money in the bank that are deposits for future jobs, that would be transferred to the new buyer. However, all the money that's in your bank that you've earned, people have paid you, jobs are closed, that's yours to keep. So ideally, that the money in the bank can cover paying off all those liabilities. So that way, when you do sell your business, whatever the sale price is, that's the money you actually get to keep. So that is step 4. We want to understand our liabilities when we're going through an asset sale. And last but not least, we want to make sure our accounts receivable is low as possible. We want to do that for a couple of reasons. One, on a day-to-day basis, we don't really want a lot of accounts receivable because we want to get paid once the job is done. So if you have a lot of accounts receivable, you're chasing money all the time. One, that's a very stressful business. So a lot of people aren't going to want to buy that type of business. But two, when somebody buys your business, that's telling them that they're going to need a lot of what's called operating capital in order to get this business up and running, because now they're seeing, okay, this business has to spend a lot of money before bringing money in. If it takes you net 30, net 60, net 90 to get paid, not as many people are going to want to buy that type of business. So work on your processes to get your accounts receivable as low as possible. Don't do business with people that take 90 days to pay you, because usually those people aren't profitable either. And we don't want to be a bank loaning money for free. So that is another thing that we want to make sure is our accounts receivable is as low as possible to make it more attractive, increase the valuation, and give people the confidence that when they buy this business, they're not going to have to pour a bunch of cash into it right away. So in conclusion, those 5 things that we need to have in order. Again, these aren't just the only 5. These are 5 that I see the most common things that we need to put in place in order to make our business a lot more attractive to sell it. Is we got to have clean books. It has to be profitable, even if that means paying taxes. If you have a good CPA, they'll help you minimize your tax bill, but still maintaining profitability. The least amount of add backs is possible. So we really want to decrease add backs as much as possible. We need to understand our liabilities and how much money do we owe to other entities if we were to sell this business. And then we want the lowest amount of accounts receivable as possible. So that is it. Those are 5 things that we need to do in order to make our business much more attractive when it is time to sell it. So if you guys have any questions, go to thebluecollaradvisors.com. I encourage everybody to get started in all the things that I went over today. If you go to the website, thebluecollaradvisors.com, you have 2 options there. One, you can book a free call with me. We'll dive into your business, figure out what's working, what's not working from a financial standpoint. And then number 2, you could tackle the number 1 problem I see with most businesses when it comes to numbers is being priced properly. There is a free pricing calculator there, comes with a step-by-step PDF guide, comes with a video walkthrough. You can get that at thebluecollaradvisors.com. Lastly, remember, just get started. The first step is to know exactly what you want. Where are we going with this thing? And then let's start taking action. So wrapping it all up today, if you do want to sell your business, just get started. You're not going to tackle all 5 things that I went over today. You're not going to get them all done tomorrow. However, time goes quickly. Even if it takes you 12 months, 24 months to do it, you'll be glad you did it, because when it does come time to sell your business will be worth a lot more. That's all I got, gang. Have a great rest of your day, and we will chat soon.